Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnhoy. Well, after a couple of weeks off the air as we celebrated the holidays and got back into the swing of things in the new year, we're back and ready to report funds flows for 2014. Our first full week this year saw relatively light flows across the board with the exception of a couple of interesting fixed income plays. So let's take a look at our macro groups and see where the activity was. Starting off the top, equity funds had about $1.9 billion this week. Again, we're only looking at mutual funds, not including ETFs here. Taxable bond funds got off to a great start with $4.1 billion added to them. Municipal debt funds showed some interesting life this week. They had only $64 million in outflows, and money market funds had about $6.8 billion in outflows, a fairly normal week for them. Well, overall, politically, it's gotten off to kind of a smooth start this year. And as far as policy goes at the Federal Reserve, they started their tapering program last month, so it's already known where we're going with tapering. We're going to lose about $10 billion at least in the next time that they go into the market to buy bonds. So now that that's off the table as far as a great unknown, people are settling into what they can look ahead to. And right now, the economy looks to be in decent shape. We're not growing at any gangbuster rate here, but we did see unemployment improve to about 6.7%, so getting close to that 6.5% magic line where the Evans rule might come into play and the Fed might consider raising the Fed funds rate. But for now, that seems a distant prospect. Overall, investors were not terribly excited by equities as we started the new year. In fact, a fair amount of selling in some quarters helped us think that maybe investors weren't going to see the momentum that we ended the year with flow into the new year. So we saw emerging markets as the week's best fund flows draw. They took in about $944 million. Long-short equity funds continued on their good trajectory from last year. They're at about $507 million for this week. But overall, the interesting story in my mind was domestic equity showing outflows of about $412 million. It's a fairly light number. It was generally balanced between a lot of large caps having outflows and some mid caps and multi-caps showing inflows. So investors are still unsettled about domestic equity right now, at least at the beginning of the year. They're just not showing a whole lot of enthusiasm for it. A similar story on the ETF side. Here, it was a very slow start for funds. About $2.5 million in outflows, so almost zero to the ETF community. Top draws this week were energy related. The Spider Energy XLE, it took in about $749. U.S. Oil, USO, took in about $489 million. On the outflow side, IWM, the Russell 2K ETF, saw outflows of about $1.1 billion. It was the week's worst for outflows. In fact, 5 of the 7 largest largest ETFs, let's say, 5 of the 7 largest ETFs had outflows. So it looked like traders were kind of selling off of their books this week as kind of a general dissatisfaction with equity markets goes. The next group to take a look at is taxable mutual funds. Again, they got off to a roaring start this year with about $4.1 billion in net inflows. And in fact, this is their best week since May. So investors have not forgotten all about their taxable bond accounts. This comes despite flat performance in the bond market, only up about 2 basis points this week. So really nothing in the market to get people excited about fixed income other than it's what they understood and know over the last couple of years. So old habits may be hard to break. We did see that alternative credit focus was the week's strongest performer. They took in about $962 million in net flows. Loan participation funds were a close second, about $776 million in inflows for them. As far as individual products go, Goldman Strategic Income, which is part of that alternative credit focus group, they took in about $350 million this week, so they were very strong at their game. Next group to take a look at is taxable ETFs. They saw a fairly good start to the year. They took in about $563 million. Again, it's a relatively small group compared to the equity side. TLT and LQD led the way. High yield also had good inflows, about $260 million. On the outflow side, investors were pulling money out of their short duration treasury products. So they were tending to be sellers of those more so than buyers of anything else. So overall, a fairly good week for ETFs on the taxable fixed income side. The next group to take a look at is municipal debt funds. Again, they started off the year with a fairly light outflow of only $64 million. This is the lightest since, again, last May, which must have been a good time for funds. But generally speaking, investors saw that perhaps the muni market is a tad oversold and they're starting to dip their toes back in the waters. As a good sign, we saw that short duration municipal debt funds had inflows this week. Actual inflows, $111 million. So investors were tending to sell the longer duration, longer maturity products, get into the short maturity side, perhaps as a way of testing the waters before they jump back in. We're looking at the yields on munis right now, and compared to treasuries on a pre-tax basis, they're exceeding them like 110, 115% of treasury yields. So it's quite a compelling move for some investors. Hard to overlook the potential in municipal bond funds right now. The final group to take a look at is money market funds. They had outflows of about $6.8 billion, which is not a terribly large number for this group with over $2.5 trillion behind it. Retail investors allocated about $2.3 billion to this group. Institutional investors removed about $9.1 billion, so they found somewhere else to park their cash for the immediate needs. So overall, a fairly light week, pretty standard week for money market funds. Well, that'll do it for this first full week of January and our flows. Thanks for joining us in the new year. I'm Jeff Turnhoy, and we'll talk to you next week. Thanks.